Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. What a week it was last week. Well, all riskier assets started moving up. Bitcoin moved by 11%. Dow Jones and S&P moved up by 4%. Trump victory was giving the market a clear-cut signal that it is a time to go and invest in riskier assets. Now, interestingly, two observations which we are going to discuss in today's presentation. One, dollar index moved up by 0.69% last week, but 10-year yield moved down by 1.94%. Whether the treasury yield is telling a story about the future momentum of dollar index, in today's presentation we are going to discuss that. Second, for the first time, gold closed on a weekly drop basis in recent times. Whether it is a start of a trend reversal or it is going to continue its rally, that is also we are going to discuss in today's presentation. Now let us start with dollar index first. If you see, last week the yields were down and dollar index went up. Entire market is just assuming that that has happened because of Trump victory. Let me clarify one more point. In Europe, Germany had a collapse in the ruling government, because of which Euro USD had fallen drastically. That was one of the major reasons why dollar index have gone up last week. Now, whether it is going to continue its trajectory on the upward movements, let us discuss that. Now, in order to decode dollar index, we have to understand what impact Trump policies will have on US economy. Basis on that, we can comment. So the first promise was he is going to go and do a tax cut. Now, if the tax cut are happening and the spending cut will not happen, or the revenue will not increase, then US will have a typical problem, which is having a higher fiscal deficit. If that happens, that is going to create a bigger problem, which is their debt is going to increase drastically again. If the debt gets increased drastically, their interest payment will also get increased drastically. In order to solve that, probably Fed has to go and cut the interest rate aggressively. And the second promise, what he said in the election pitch, was that he is going to increase the tariff of the imported goods which is coming in US. Now, when you increase the tariff, it is going to increase the inflation also. And if the inflation increases, then the real return of an investor is going to reduce if someone is putting their money in US economy. So probably we think that tariffs, he will be using it as a negotiating tool with other countries. Tax, tariff, and Trump, that has happened in first term also, and probably that is going to happen in second term also. Now, in order to understand, let us go back to history. In 2017, when he resumed office, at that point of time, dollar index was trading at 101.50, and dollar index made a low of 88.12 in 1 year after he resumed the office. And when he left the office, at that point of time, dollar index was trading close to 90.58 kind of level. It gave us a clear cut signal that whatever Trump may say, but he does not like stronger dollar. Now, what is the outlook of dollar index in near term? If you see the chart, 105.50 to 106 kind of a level will act as a strong resistance for dollar index. Euro USD, we are expecting it that it will take support near 1.0650 to 1.07 kind of a level, and it should ideally move back towards 1.08 and 1.0950 kind of levels. GBP USD, we are expecting it to take support at 1.2850 kind of a level and expecting it to bounce back towards 1.3050 kind of levels. Now let us discuss other asset class, which is gold. We think that gold has made a near term top near 2805 kind of a level. In our somewhat 2081 video which we released last week, we indicated the investor that gold is near that top and we are expecting it to go downwards. Now it has given a confirmed signal that it had made a top. We are expecting it to go down towards 2300 to 2200 kind of a level in the long term, but in medium term target stands good for 2500 dollar per ounce, and in Indian terms we are expecting it to move towards 77,000 and 75,000. Now let us discuss outlook on rupee. With Trump returning to power, it is very clear that rupee volatility is going to increase drastically, which is trading currently at lower level. We will suggest all exporters and importers that they should tighten their belt and get ready for a bumpy ride ahead. In the volatile times, only those exporters and importers who will manage their risks well will be able to protect their business margin. Before the US election, the market had two concerns about rupee. First, the dollar index was rising, and second, FII had been selling in Indian equity market. Going forward, MSCI rebalancing fund is expected to hit the market. The expectation is that MSCI rebalancing flows are close to $2.5 billion, and we are expecting that as the uncertainty of US election had ended, FII will again resume its investment after 15th of January, because in the month of December generally we see that FII inflows are on a lesser side. And for dollar index and 10-year yield, we are assuming that dollar index is likely to move towards 103.50 kind of a level from a current level of 105, which is going to support all emerging market currencies, and therefore it is going to support rupee also. So basically we can conclude saying that in the near term 8450 to 8470 is going to act as a strong resistance for dollar rupee pair, and the pair is likely to move back towards 84 and 8380 kind of levels. Now let us discuss strategy for thin margin exporters like agri exporters or chemical exporters. As the US election story is over, we are expecting that rupee might face a strong resistance near 8450 kind of level. So between 8430 to 8445 kind of level, we will suggest thin margin exporters that they can cover 100% on a back-to-back basis. If someone wants to wait, they can keep a strict stop loss of 8420. Now let us discuss strategy for thick margin exporters like textile exporters or engineering exporters. With the current weakness in the rupee, we will suggest them that they should take this as an opportunity to increase their hedge ratio. If you are hedging against confirm order, then they can increase the hedge ratio close to 75 to 85%. If someone is hedging under anticipation basis, generally we suggest them to hedge between 55 to 60%. I think they can go and increase their hedge ratio towards 65 to 70%. अभी कौन से लेवल पे hedge करना है? They can hedge at current levels between 84.35 to 84.45 kind of levels. Now let us discuss strategy for importers. On our 21st October video, we suggested importers that they should keep a stop loss of 84.10 kind of a level. If 84.10 is broken, then they can go and cover 30% of the near-term imports. Some of the importers have maintained the stop loss and have bought at 84.11 or 12 kind of a level, but some of them have missed. Now those who have missed covering near 84.11 or 12 kind of a level, they can keep a stop loss of 84.50 and wait for a lower level of 84.20 and 84 kind of levels. Another important aspect which lot of importers are asking us is that whether they should go and take INR funding or whether they should go and take foreign currency funding like suppliers credit for their import. We will suggest them at 84.40 or 84.50 kind of a level. It is viable that they should go and take foreign currency loan, because we are expecting rupee to again come back towards 84 and 83.80 kind of levels. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.